Hello and welcome to this channel. In this episode, I'll be talking about fair value gap. I'll be giving a simple understanding and explanation of the ICT fair value gap. So, according to the Inner Circle Trader ICT, fair value gap is the price imbalance created due to strong buying or selling pressure. So, price will maintain bullish or bearish momentum, but later will pull back into the fair value gap to mitigate the imbalance or inefficiency. So, simply put, fair value gap is an imbalance in price movement. So when price leaves a space in between any three candlesticks, that is called imbalance in price movement, and therefore market will come to mitigate that imbalance. For example, in such a scenario, market will retrace to fill this gap before moving down, and similarly price will most likely come back to fill this space before continuous uptrend. Essentially, in an efficient price movement, market will always generate a candle, moves this to this high, creates another candle, and every candle should fill the gap in between. There should be no space in each of these candles. So this last bit, and then the third candle comes slightly down to fill the gap. So there is no space in between. Whichever time frame you're using, this happens always. Similarly, on a bearish movement, the middle candle there is a mitigation and there's no space in between. So this is an example of an efficient price movement. So let's look at a real example in the charts. So if we take this example, any three candlesticks, so there is this red candle here, and the third candle closed above, so there was a space in between. So this is the fair value gap, and the market immediately has come with a long candlestick, bearish candle, to fill this gap. So again, there is a space here in between this candle and this candle. So there's a gap. Let's see if the market will fill that. Good. This is a fantastic example. So the market will always return to fill the gap, the inefficiency or the imbalance, before its continuous movement on a downtrend. Now this one is a huge gap. Let's see if it will be filled between this candle So this is the fair value gap. Let's see if it will be filled. Now there's another one here generated already. Any 3 candles. It has not yet been filled. Let's be patient and see if it will be filled. The imbalance not yet mitigated. First one is an attempt, and we count that as a mitigation. Good. So this one has been mitigated. This imbalance has been mitigated. We're remaining with one here. Let's see if it will be filled. Fantastic. Look at this candlestick. This one has successfully mitigated this imbalance, and now we are not sure if the market will be continuously in the bearish momentum or it will change direction to move upward. But whichever way, the fair value gap has been filled, and this is how the market will always do. It always mitigates those imbalances or those spaces, the inefficiencies left by the price. The market has left a gap. So in the process of filling this gap, the market left another gap here, and so this is another inefficiency, an imbalance that must be filled or mitigated. Let's see. So the market comes down again to mitigate this imbalance and makes a continuous downtrend. So there's another small space here. Let's see if this will be filled. Now I'm using for our time frame. You can use 1 hour, 30 minutes, 15 minutes, or even 1 minute, or even daily time frame. Whichever time frame you're using, all these inefficiencies must always be filled. Any 3 candlesticks, any space in between, that is an inefficiency in the market, in the price movement, and the market will always fill them. Let's see. This has been filled again, successful. This is interesting. You can continue on and on to test. Now there is a lot of imbalances here. Let's see if they will be filled as well. This is another one. Let's see if this will be filled again. The first one has been successfully mitigated. Let's see if the other one remaining will be mitigated. Successfully done. So you can go on and on to test, to back test it, to see if these inefficiencies are mitigated. Whichever time frame you're using, it might not be done the same day or the same week or the same month, but sure enough, market will always find time to fill those gaps. Now, this video was about understanding of fair value gap. You can always trade using this strategy, but I would suggest it is not within the scope of this video. I'll be making another video combining fair value gap, liquidity, and other parameters like Fibonacci retracement to get a sniper entry. So based on my own experience, I do not suggest you trade using fair value gap alone. I would recommend you combine it with something like Fibonacci retracement or liquidity grab, or any zone. You identify zones of price movement and or any other parameters that you can find it relevant, but this should be just part of your trading strategy. I'll be making a combined video with a real trading strategy that I use. To this far, thanks for watching. If you gained value from this video, let me know in the comment section. Also, please, if you have not subscribed, please consider subscribing, share to your friends, and also like this video. And until next time, peace.